Alrighty, welcome everybody into this week's market update for the last day of May. Yeah, bring it on June tomorrow, guys, right? So don't forget that any advice contained within this video is general only, so it's tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, our market pretty much just gave back most of yesterday's gains. Okay, so we closed just on that 72 level. All right, we've got a bit of resistance through that level, with the big question of whether we're going to use that as a level of support or not. Okay, zooming out over the medium term, as you can see, there is definitely a sideways pattern on our market at the moment. Okay, so overall sideways pattern, the uptrend's come to an end at this point. Where we differ a lot from the US markets, guys, is we've held our key levels of support where the US market actually broke through those key levels. So we're still technically in a channel. Okay, we're not downtrending as such. Now, our short-term downtrend that was inside the channel has now broken. We are now on a short-term uptrend, with leaving a sort of question on how far this is going to go. It's come up a lot already very quickly, okay, and it's brought our market into that overbought area. The last time our market did this, we shot all the way up to the all-time high. Okay, I'm very doubtful that this is going to be a repeat of that. Okay, I do think it's going to fall short and probably pull back down again. I have a few reasons for that. I'll talk to that in a moment. They're not technical reasons, they're more fundamental reasons. At this stage, technically though, okay, we're on an upward move. So momentum's up in an overbought area. I suspect we could easily come back up and test one of these few resistance levels. So 73.50, thereabouts, where the 200-day averages are, or a few of those averages are starting to converge. Otherwise, there's another resistance up a little bit higher around sort of 74.30, thereabouts. Okay, so they're kind of my upward targets. Tonight's the night. The US is reopening after Memorial Day, so let's see what they want to do. Really, that's what's going to dictate tomorrow. So where they left us last Friday was, a 3-day massive rise off the bottom, fulfilling a double bottom pattern. Okay, so that double bottom pattern, in fact, is suggesting that the US market wants to recover back to around 4,300. Okay, so that's for the S&P 500. It's broken the short-term downtrend line through here. Okay, I've taken that line out purely because it's not in existence anymore. So that acceleration down is now broken. Doesn't mean that they've now going to magically turn into an uptrend, guys. Double bottom pattern does not mean they're in an uptrend. Okay, a double bottom pattern simply means it's bottomed out for now. It's going to reverse some of this downward movement, okay, that we've seen. From there, we need to wait and see what the next move is going to be. If it goes above 43, I'll start talking a bit differently, because then we're starting to talk high, pretty much potential higher peaks, higher trough scenario. So really, once again, we're in sort of in between patterns. Okay, so it's already lifted quite a bit already in the overbought area. I dare say for the short term, 42 is my target. Okay, that's where there's a potential downtrend here. If that forms a lower peak, that's just going to confirm our overall longer term view of bearishness in this market. So let's just see what happens, right? A lower peak at 42 gets me bearish. A peak at 43 gets me a bit more sideways. Okay, so let's just see where they want to drive this and how far they can drive it. The pullback into our close today suggesting something's on the horizon, guys. I feel that tonight's going to be a bit of a bearish night in the US. The US futures right now are sitting at 41.55. Okay, you can see by the chart here they close at 41.58. So don't be too confused there. Okay, the futures do include a upward move of last night, that they've just given all that upward move last night back in the futures market. The live market is pretty much going to be, well, the futures to the live market is pretty much flat at this point, not 24 points down. All right, so yeah, let's see what happens, guys. Overall, this is a downtrending market, in my opinion. It doesn't matter how you look at it. You've got a lower trough, lower peak, lower trough. Okay, what's a downtrend, guys? Lower peaks and lower troughs. That's what you got in front of you right now. Until that changes, I'm calling it a downtrend. You got a head and shoulders pattern up the top here that's suggesting a move down to 3,500. I'm going to continue to assume that that's on the table. Okay, obviously with technical analysis, we're always allowed to change our view when the technicals change. Haven't changed for me yet, guys. I've still got a potential of a lower peak here. If that confirms, then I'll continue to confirm that bearish view. If I start seeing higher peaks, higher troughs, then things change, right? So technically, we can't call this the bottom just yet, right? We've got the double bottom pattern definitely gets us bullish to 43, but we're not out of the woods, guys. We're definitely not out of the woods yet. So that's the number one question everyone's been asking me this week. Is this the bottom? Do I start piling into the US? Do I start piling in and buying up all these beaten down growth stocks? No, right? No, right? We're just not there yet. Have a play, yeah, no worries. Double bottom pattern, have a few trades, whatever. From an investment point of view, has this market bottomed? I can't see that yet, guys. Okay, possibly. There's always a question mark, right? We're always asking that question on a weekly basis in a bear market. But until I see that high peak, high trough scenario, or if I start seeing the Fed backpedal a little bit and become a bit more dovish, I'm not seeing that enough from J Powell yet. Then I'd start changing my tune. But I'm not sure if we're quite out of the woods yet, guys. I'm not sure whether we're going to see a little bit more pain in that inflation side of things in the coming months or not. That's the big thing, right? So the big thing for me, whilst the US market has been closed, really, is that you've had oil jump high in the last 3 sessions. So crude's now broken that key level of resistance, okay, around what 110. It's trading up near 117, 118 now. With crude rising, that's going to put more pressure on inflation, not less. Okay, so what's caused this? There's a few things, right? So obviously, European, a lot of talks in Europe about banning Russian oil, getting off Russian oil and gas, all of that sort of chatter. Okay, putting more sanctions on Russia. That's a big part of it. That's probably a major part of it. The other smaller part of it is China's coming out of lockdown. Okay, so that puts more demand out there. You're seeing copper go up, you're seeing iron ore go up, you've got metals recovering, your commodities going up. That's all inflationary, guys. Okay, so China stimulating all those, very positive for our market, very positive for our miners, very positive for our exporters. It's also a bit of a double-edged sword in that it puts a lot more pressure on inflation. Okay, so we've got a supply chain issue. Demand goes up, inflation goes up. It's as simple as that. You've got the Fed and the other central banks of the world trying to bring demand down. They're trying to taper demand. They're trying to weaken the economy temporarily so we can get through this supply chain issue and bring inflation down. But you've got China amping up, okay? China being one of the biggest economies or biggest populations of the world, second biggest economy, the biggest population of the world, right? Coming out of lockdown and talking about stimulus. Okay, so for me, there's some interesting dynamics out there. Before you start saying that you think inflation's topped out, well, you might want to start considering some of these other things. Okay, not seeing this talked about enough in the mainstream media. Crude's almost at 120. It was 90 at its lows only a month or so ago. Okay, it's now at 120. All right. So I'm not seeing that talked about a lot right now. Where back in February, that was the main topic of discussion, that crude was going to go to 180 and this and that and the rest of it. I don't think it's going to go to 180, guys. But hey, even if it goes to 140, that's going to put a lot of pressure on, right? So just keep that in mind, or in the back of your mind. There's still some headwinds to come that nobody's talking about. It's very easy for the media to start talking a bit more positively when you have 3 bullish days. Watch the negativity come back in if you see a bearish day. Okay, so just keep that in the back of your mind. There's a lot of headwinds to come our way. I can't see this being the bottom just yet. Don't get me wrong though, guys. There's green shoots out there. There is definitely some green shoots starting to show. And what I mean by that is there's some things starting to show that inflation could be nearing its top. The bond market's starting to show some signs that it's also starting to think that interest rates may not go up as much as before, right? So bond yields have come back down, they've eased off a little bit, we're seeing a little bit of buying in that space. So the mood's definitely eased a little bit, right? But there's still a lot of headwinds to come that the market needs to get through. So I don't think it's going to be that same recovery as what you've seen in the past where the market jumps 20%, 30%, blah, blah, blah. No, I think there's a lot more volatility in the next 2 months. All right. So you've got to ask yourself this question constantly. Has inflation topped? Has inflation topped? At this point of time, it's probably close because the base that we're coming off is coming up. right? If you go look at CPI readings 12 months ago, they've jumped quite a bit from their lows that we were getting our readings off recently, okay? So it's that base effect, okay, on the CPI readings. I think the May reading of last year went from like 2% to 4%. The inflation had already started jumping. So that will make it easier for those CPI readings to top out. But if crude keeps going up, guys, right, guess what? Food prices keep going up. Petrol prices keep going up. Everything goes up with crude prices, right? So that's the big thing to watch, okay, is if that it continues to be the theme in the coming weeks, then this inflation thing's going to flip around quite quickly. All right, so interest rates. We know the Fed's lifting rates are middle of this month. So 2 weeks from now, you're going to get a 0.5% increase in rates. End of July, you're going to get another 0.5%. The jury's still out on what's going to happen after that. Most of what I'm reading out there from Jay Powell and the rest of them is they're going to continue to raise rates throughout the rest of this year. Okay, that's a massive increase of rates from near zero to where they could end up, right, which would be upwards of 3% if they keep lifting rates for the rest of this year. We've got 1% coming our way, guys, in the next 2 months. All right, that's gonna bring you up to around about 2%. Right, if they keep going for the rest of the year, that brings the Fed rate up to about 3. That has to put a lot of pressure on. Okay. Now, obviously, it's a little bit different in the US to here, in that a lot of the homeowners over in the US will have loans fixed for 30 years. So they've already fixed. Most of them would have already fixed near the zero rate, which means they're probably paying 2%. It's allowing any new people coming into the market. That's where the big problem comes in. But don't forget the big pressure that gets put on these high growth, high debted companies. Okay. So companies are relying on a huge level of debt to promote growth. Discretionary spending gets hit in these cycles. So these types of growth companies usually don't see a lot of growth, right? But two, they're going to have to pay higher interest rates in the bond market. So it's has this cycle finished, guys? Has it finished? I think it's just begun, right? I want to see the Fed start backpedaling a little bit before I want to call the bottom of these markets. All right. Now for the RBA is announcing Tuesday week. Okay, so next week, first Tuesday of every month. So next week, they're expected to lift rates by a quarter. The RBA will be slow to lift rates. Okay, unless inflation gets out of control here. We haven't seen the same type of inflation here just yet as what we've seen overseas. Okay, but come September, when they lift the tariff back up on petrol prices, who knows, right? So there's still a lot of uncertainty to come, guys, right? If they continue to lift the interest rates here, that's going to put a lot more pressure on the housing market. If they lift too quickly, it's going to put too much pressure on, guys. Okay. So I can't see the RBA doing it here. Prices of houses to wages are much more out of control in this country. So the RBA, I think, is going to be a little bit hamstrung here to go too much too quickly. And as I said before, we don't have the same inflation issue as yet as what we've seen overseas. So for me, things are a bit more positive local. Okay, so I think our market will easily continue its sideways path, yet volatile and whippy, but sideways, okay, more so than anything, because I don't think the RBA is going to lift rates as quickly or as hard as what the Fed will. And we're also being supported by materials, okay, mining, exporters. We've got a great export market out there to the world and to China on materials. And if China continues to stimulate, I think our materials could do as well. So look, interest rates is the big thing to watch for the US, right? Is the Fed going to keep lifting aggressively this year? That's what you got to keep asking. If the answer to that question is yes, they're going to keep aggressively lifting rates throughout the rest of this year. I don't think we've bottomed yet. Guys. As long as there's a question mark on that, once the Fed backpedals, they turn around and start saying, "Oh, look, we might wait a little while. We might wait a couple of months and see how the current lift of rates has gone." That's your buying in opportunity. That's when they're starting to backpedal a little and go, "You know what? We've done our job. We're just going to sit on our hands." Right? that's the change I'm looking for, guys. The hint of that. All right, I don't think we're quite seeing that yet. We've seen one Fed member last week sort of sniff that out, sort of hinted on it a little bit. But until Jay Powell comes out and says it, then I'll change my view, right? So keep an eye on this space, guys. I reckon the markets are going to get nervous again here coming into the next round of Fed members talking and interest rates being decided on. Okay, all right. So that's where we're at. Look, our market here in Australia is going to do something in between the US and China. If China's talking stimulus, that's going to help our miners. Okay, that's the major. And then a lot of our other sectors could easily follow, depending on what the sentiment is around the US and the rest of the world. So, all right, that's where we're at. So, more volatility to come is my view. A lot of whippiness in our market, and that's where it's at. So, thanks for listening in. Take care, and bye for now.